Hello, this is Chet Young of Speaking of Bitcoin. I'm here in studio for Podcast 3, keeping you up to date in the latest news of the cryptocurrency world and specifically or more directly relating to Bitcoin. In the studio with me today is Austin Young, and we're going to be going over the latest news and happenings in the last 3 or 4 days of Bitcoin. If you're a Bitcoin enthusiast at all, you realize that Bitcoin has enjoyed some tremendous rise in value over the last, the last couple of months, right, Austin?
That's right.
But this past week, it actually experienced a fallback.
Yeah, and boy did it.
Yeah, and we're going to go over some of that news relating to that. And China may be the one that really has caused the whiplash, so to speak.
Yeah, a lot of people think that the news out of China did precipitate the drop in value over the last few days or last week. The Chinese central bank, I guess it was, came out with some new guidelines and restrictions on the use of Bitcoin. They defined it as a sort of virtual commodity and said that it's not a currency and that it shouldn't be treated as a currency. So they placed restrictions on its use, I believe by financial institutions, but they said it's still okay for the citizens to freely use and freely trade.
Yeah, they said in a statement on Thursday that the Chinese central bank, like you said, raised questions about whether Bitcoin could ever gain true legitimacy, and I have a hard time saying that word, as a legal tender. In essence, Bitcoin is a kind of special virtual commodity and does not have the same legal status as a currency. I think part of that has to go with the newness of it. It's more of a speculative currency right now.
Yeah, and I think also the fact that Bitcoin's not backed by any entity. So I think that also played a role in China determining that they believe it shouldn't be treated as a currency.
Yeah, and I think they said that the price can be easily controlled by speculators, creating severe turbulence and huge risk. Ordinary investors who blindly follow the crowd can easily suffer major losses. I guess it's kind of a warning there to kind of, be careful with this new currency, so to speak.
Yeah, and it's true. It's probably good advice. We've definitely seen the Bitcoin market take sharp rises and sharp drops, without any clear indication of, any news coming out. So I think people or investors have probably been manipulating the market to some extent.
It's kind of amazing because earlier in the year, I think it was the lowest, at the beginning of the year is $13.50, somewhere thereabouts.
Something like that.
And it went as high as $1,200 and some odd dollars. And this past week, I think it fell Friday, maybe early Saturday morning, fell to the mid 600s. And it's since bounced back somewhat as we're in studio today. It's I think it's somewhere around 770ish at the time.
Yeah, mid 700s.
It's been on this run for about a month, right? The first thing started with the Senate hearings. China, I think there was an announcement made in China.
The internet search company Baidu announced that they were going to accept it for one of the services that they offered. And that helped. That seemed to drive the price up a bit because it looked like it was gaining, wider market acceptance, and it has been gaining wider market acceptance. But Baidu was probably, at least up until that point, and maybe still, was the largest name to have accepted Bitcoin. But, now, the biggest name in Bitcoin might be Richard Branson and Virgin Galactic.
Is that right?
Since Richard Branson announced in the last week or so that he and Virgin Galactic would accept Bitcoin for space rides to space in the future when they actually start offering it to the public.
Oh, wow.
Which would be pretty cool. I'm sure there's going to be a lot of Bitcoin millionaires out there that might have to seriously consider that.
What's that website that shows the distribution of Bitcoins? Who has them? How many they've got?
Oh, I'm not sure.
But
Bitcoin
anyway,
Rich List or something.
Yeah, it's amazing how many Bitcoins some people have. I'm thinking we might see some of our first trillionaires, so to speak. I mean, who knows? I mean, there's some people out there that's got a lot of Bitcoins, and if Bitcoin goes to what some people are projecting it to go to, and I've seen some crazy numbers, and I probably don't even want to throw those crazy numbers out there right now, It's interesting what's going on in the news. Another article I ran across, it comes from the Economy Hub with Michael Hiltzig. It says the Bitcoin crash of 2013. Don't you feel silly now? Isn't that funny? Also, it looks like people are wanting people to be duped, or so to speak. It kind of reminds me of a lot of people in football. How they're happy when another person's team loses or something. So this guy comes across as being happy that Bitcoin is falling, in his opinion. It's like you got duped.
Yeah, there's a lot of people that maybe they don't understand Bitcoin and they don't immediately see the advantages of it, and so they think it can't work or it shouldn't work, and so they say, hey, well, since this can't work, I think the price it's going to have to drop. So they see the price drop, and that appears as validation. But I would say it's too early. You can't say that, just because the price dropped from 1,200 to 600, that now Bitcoin is no longer useful, or that it can't be used as a medium of exchange.
This guy's opening line, Austin. People who thought that Bitcoins could serve as either an investment vehicle or an alternative world currency got their heads handed to them on Thursday and Friday.
It just seems a little silly to me to make a statement like that. Bitcoin's been around for just a little over 5 years now, and arguments like this are less and less relevant over time. In the very beginning of Bitcoin, I think it was in 2009 when Bitcoin enthusiasts paid 10,000 Bitcoins for 2 pizzas. Well, yeah, Bitcoin was really volatile then and had no market acceptance. I think that guy with the pizza, that's supposedly the first real world transaction. If this was really a great argument that this volatility is just inherent and kills Bitcoin, if that was really a good argument, it would have already died out when there was no one using it. But we've seen over time more and more people use Bitcoin and more merchants accept it. So how can you say that it obviously doesn't work when the price dropped by 50%?
We were talking a little bit earlier about stock. You can consider the stock market. I guess around 2008, it was around 12,000-ish or somewhere.
Yeah, and it's the Dow.
And it dropped to about 6,000. So it cut in half. We didn't see people running around. Well, see, I told you the stock market wasn't going to last. It was going to, it's going to be over. It's not a valid or a true commodity or investment vehicle for you to be in. Yeah.
It is silly. I mean, I'm sure there were a lot of people that did sort of write off the stock market, but they probably weren't actual investors, but we didn't as a society say, oh, you know what, it can't work.
Right.
It's not useful because look how unstable it is. The housing sector crashed, which crashed the stock market. You could say, well, look how susceptible to fluctuation and market forces the stock market is, because the housing sector crashed and that knocked the stock market out of whack.
Yeah, he says the whipsaw validates what we wrote about Bitcoins just 2 weeks ago. They're useful as a medium of transfer, but even then you have to be nimble. If you were Greek or Spaniard using Bitcoins to move money out of your home country without having to worry too much about your local foreign exchange or banking rules, and you figured on Thursday that you would get around to transferring your asset back out of Bitcoins and into dollars or sterling, whoops, you lost half your stake in a matter of hours. The minimum time required to complete a trade in Bitcoins is 10 minutes. That's about how long you should hold them to keep exchange rate low risk. We might not just move on from this guy. I don't think the guy gets it,
I don't think he does.
And actually we have some pretty good other articles that were coming out as Bitcoin was falling that day on explaining the usefulness of it as well. In an article released on December 6th in Inc. magazine, the article titled, Bank of America Bitcoin Will Be a Serious Competitor to Cash by Will Yakowitz. A new report from analysts at the bank suggests that digital cryptocurrency is on its way to becoming a major player in electronic payments. It says for the first time since the mysterious Satoshi Nakamoto created Bitcoin in 2009, A major Wall Street bank has issued an opinion on the cryptocurrency. Bank of America is betting on Bitcoin's legitimacy, according to a report released today. Bank of America Merrill Lynch claims Bitcoin may emerge as a serious competitor to cash in e-commerce and digital money transfers.
That's right. So they did this analysis and they tried to find a fair market price of Bitcoin, and they analyzed its particular advantages and disadvantages to try to gauge how it could be accepted by the market, and again, what would be a fair market price. So they came up with a potential maximum worth of Bitcoin of about $1,300. And I haven't actually looked at the analysis, the Bank of America report, for myself, but I've heard it said that their analysis really only took into account the United States, didn't take into account the whole world. So that $1,300 per coin estimate could potentially be a bit low, but it may be accurate for right now, the way the market currently is.
Well, it said that considering how it flew up the day after Thanksgiving up to $1,242, I guess we discussed that a little earlier, I guess $1,242 is the peak thus far, that it was at risk of running ahead of its fundamentals, which that's understandable. I mean, It is having a big run-up right now, and in my last podcast, I spoke about a hedge fund from exante.eu where, it has set the world record for gain in a year. It was like 4,957%, at least until it fell the other day. But incredible gain in that hedge fund. So, it's probably running ahead, but they list some advantages here. Low transaction costs, transparency and security, Bitcoin supply mimics gold, limited anonymity in the black market, which I guess, mimics gold. I guess that's in the fact there's a limited supply of it.
Yeah, you're right. That is in the fact that there's a limited supply of Bitcoin, and it's in how the supply is controlled. So the supply of Bitcoin was designed to mimic things like the supply of gold and the supply of mineral deposits and whatnot. And it was designed such that over time you have a diminishing amount, so that I think the year's 2140 we will finally have mined all of the Bitcoin, but here in just the next, 10 or 20 years, we'll have 99% of them.
The article also talks about the disadvantages of Bitcoin, and I think some of them, probably, at this point in time, they're obviously legitimate. A little bit of instability. Some people comparing it to tulip mania, which is, I don't know if you've ever read anything about the tulip mania, which I think that's way back. 1400s or something. Maybe not that far back, but tulip mania. Where tulips were a kind of like an exchange of currency, so to speak.
I suppose. I guess they used them sort of as a currency, but it seems like it was the Beanie Babies of the 1600s or
there you go, yeah,
whatever century. But
the other thing that's happening is hackers still into Bitcoins. A lot of people say Bitcoin is not a legal tender. That's interesting on what you call considered a legal tender. I guess if you say it's not a fiat currency, and it's not, is it recognized by the government? No, exactly. So it depends on how you look at it, but it's like a barter, I guess. Some people really, I've brought this up in my previous podcast too. It's kind of like a barter system. I'm willing to take Bitcoin right now for a DVD I've got that I want to sell you. I'll be glad to take it. So it is a currency in that aspect. And now there's exchanges, and we can exchange our Bitcoins for fiat currency. But I understand where they're saying it's not a legal tender. The thing that I think I definitely agree with is the risk of government regulation. Since Bank of America said it is unlikely that the government will promote a new currency, especially one as suspect as Bitcoin, as the U.S. government is trying to figure out where Bitcoin fits into its tax and payment system. Regulation of any kind would increase its transaction cost, thus offsetting one of its major benefits. So, you can understand where government regulation may be the one thing that could slow the acceptance of Bitcoin down.
Yeah. If the government really did decide to crack down on Bitcoin and try to regulate it, they couldn't. The government can't really stop the citizens from using it, and certainly no one government can stop people in other countries from using Bitcoin. But if they made it illegal for merchants to accept Bitcoin, then that really would put a damper on the currency. Again, it wouldn't stop people from trading, or transacting Bitcoin, but you wouldn't have as many places to spend it. But that might not be a problem at all for the black market, or again for people in lots of countries where like in Africa for example, where they currently don't have a very good banking system. Most people don't have banks, or maybe I shouldn't say blanket that over all of Africa, but in several countries at least, they are largely underbanked.
Well, they're even saying some of those countries will use like cell minutes as currency.
Mm-hmm. Yeah, that's right. Or at least they have used cellular minutes for currency. And then I believe it was M-Pesa that sort of actually replaced the use of cellular minutes as currency. And now they exchange these credits via their cell phones. Because they do have cell phones, and they just don't have, or don't often have, good computers and access to the internet. But they have cell phones and cell networks. So Bitcoin is still highly useful to those people.
I've got another article we ought to probably take a look at, Austin. It was an article online from the exchange. It's a Yahoo Finance blog, and it's the economic case for Bitcoin. Written by Lawrence J. Kotlikoff. Bitcoins have received a bad rap by many economists and journalists. Andrew Ross Sorkin of the New York Times says that Bitcoin is, at best, a second-rate version of gold that only people from Mars and presumably other extraterrestrial abodes would take seriously. He also points to the proliferation of Bitcoin alternatives, asking if we can imagine a world in which we all transact with dozens of different currencies every day with different rules. Well, students of monetary history can certainly imagine such a world. The U.S. greenback didn't make its appearance until the Civil War. Before that, all manner of currency circulated on a routine basis in our young country. Prominent personages, for example, printed up their own currencies called bills of exchange. These were IOUs that promised to exchange a certain amount of gold when the bill was redeemed. Bills of exchange could be endorsed over to others and used in commerce. As long as they weren't redeemed, the original issuer was home free, having printed pieces of paper which he was able to use to acquire real goods and services. Bills of exchange were common in the early years of the Republic. So were banknotes issued by banks and states, silver and gold coins minted in Spain and other countries, as well as the U.S. government minted golden eagles and other coins. And the practice of rolling ones on a currency continued into modern times. During the Great Depression, some 3,000 currencies were produced by various localities, some of which were printed on tree bark and some on pieces of car tires. California, the world's 9th largest economy, periodically gets close to going broke, and when it does, it pays its employees in state-printed IOUs. I didn't know that. Which then circulate, if not very well, as currency. In large parts of Africa, cell phone minutes are used as currency. In the U.S., airplane miles and credit card points are, in some ways, a type of currency. So yes, we can imagine a world in which we all transact with different currencies. After all, before the euro, Europeans were routinely holding and transacting in multiple currencies.
That's right. So that's not too strong of an argument. And actually, to add to it, not only have we already been through times where we've used multiple currencies, I think it's going to be a lot easier if Bitcoin and multiple alt currencies sort of take hold. I think it'll be easier to spend those currencies and to trade between them than it is or has been in places like Europe using, pounds and francs and lira. I think it will be trivial to spend your Litecoin and Peercoin and Namecoin in addition to Bitcoin, compared to those economies, where if you go into another country and now you have to use their currency, or maybe you could still spend your currency, but there's some exchange rate. I think because it's all a computer program, right? So once you get it set up, or you run multiple wallets, or you use maybe you use some payment processor, and they add the ability to accept these other currencies, and then it's trivial,
Right. So, is it going to replace the dollar?
Who knows? Probably not.
Probably not. But it's obviously it is. It's a simple thing to do. We did a a couple of Litecoin transactions today. Actually, it was Peercoin, I guess. I mean, it was quick, it was instantaneous, and then go back and forth from Peercoin to Bitcoin, from Bitcoin to US dollar, and you can actually go from Bitcoin to Euro, like you said, or Bitcoin to whatever the Russian currency is now. I mean, right now, you could go to any currency pretty quickly and back. The world's changing in a hurry with this type of cryptocurrency, mathematic equation type currencies. I mean, it's pretty neat in and of itself.
Mm-hmm. And another case that they make in this article, titled "The Economic Case for Bitcoin," it would probably be good if Bitcoin did replace the U.S. dollar. The U.S. is guilty of it, and many other countries are guilty of it, of printing and printing more and more money. We have irresponsible monetary policy, and we have irresponsible spending. And then how do we pay for these things that we don't have the money for? Well, we print more money. But that's only a temporary fix, and that's really not an equitable solution. Because when you print more money, you're essentially taxing the people, all the citizens. And I would say that it probably hurts poorer people the most, because when the Fed prints that money is first distributed to the big banks, and then it has to trickle through the economy. And the people that have the money first have the most advantage. They essentially get to spend money that's worth less to them than it is to the rest of the economy. And as it trickles through, that advantage lessens and lessens, and the last people to get it have no advantage. And that's often going to be poorer people.
Right. This article states that 29 cents of every dollar of federal spending is being printed out of thin air by the Federal Reserve. The Fed feels it can withdraw all this money from the private sector, which what you were saying, whenever it likes. But doing so will require getting a politician to do something they don't like, namely raising taxes to pay for what they spend. Mm-hmm. And it even goes on to talks about the great profusion of money creation is not limited to the U.S. The U.K., the Eurozone, and Japan are all printing money like mad. They say it's meant to stimulate their economies, but each of these government regions is thoroughly broke if one looks beyond the nose of our short-term budget horizons. And most of our leaders don't want to look to the future. They're worried about the now, right? Mm-hmm. That's why they are printing money and will continue to do so until inflation, if not hyperinflation, starts rearing its ugly head. The use of bitcoins would hasten the day when the printing presses are turned off and prudent fiscal management is turned on.
That's right. These things wouldn't be possible with Bitcoin because it has a controlled supply and because how transparent it is. You can see every transaction on the blockchain, and you can't print more Bitcoins.
This was a really good article. It made a lot of good points. We're getting close to, probably need to end this podcast. I usually want to keep our podcast around the 30-minute or so time frame. But I've got maybe one more article that I'd like us to touch on. This article is written by Michael Carney, a Bitcoin warrior. Bitcoin becomes a victim of its own success, illiquidity.
So the price of Bitcoin, as everyone knows, is relatively unstable. It's very volatile. It swings up, it swings down. And part of its problem, or one of the things that leads to these wild swings, is illiquidity in the marketplace. It can be pretty hard to get your money in and out of Bitcoin sometimes. Let's say the price starts dropping and you have some people that start trying to buy back in. If a lot of selling has taken place, the people that are buying back in, maybe they spend most or all of their fiat currency. Well, it can take days to get more fiat into these exchanges. So, the price might drop and then it may take days to have a level of support to bring it back up. Or the opposite may happen. The price might rise quickly, and then some people may want to start selling out of Bitcoin. And maybe it takes a long time to get their money out. And probably part of the difficulty with that is that these are, there aren't that many Bitcoin exchanges still. There's a lot more than there used to be. But these are still small startups, largely. They're kind of in uncharted territory. They're small companies, and they're learning how to run these exchanges. And oftentimes they don't have good support from the traditional banking sector, which they do have to have. They do have to have regular banks because they have to hold fiat currencies. And they have to be able to let people trade in and out of those currencies. So sometimes they have trouble finding banks that'll support them.
Tokyo-based Mt. Gox, Austin, it said, which was the world's largest exchange until recently, has faced lengthy delays in fulfilling requests to withdraw fiat, which you discussed, government-backed currency, since the Department of Homeland Security raided its U.S. bank accounts. The recent run-up in price has only exacerbated this problem, with many customers reporting waits of up to several weeks to receive or withdraw their funds, which is, I think that's led to a lot of American people staying away from Mt. Gox. I'm sure they've lost a lot of their customers there. On November 17th, U.S.-based Coinbase alerted customers that it was halting Bitcoin buying activity. A note on the company's website announced that while customers could place orders, these orders would not be priced or fulfilled November 22nd, a full 5 days later. Over that time, the price of a single Bitcoin increased from $544 to $844, costing buyers a potential 55% return.
Ouch.
Yeah. Slovenia-based Bitstamp, which is currently the world's second largest exchange behind BTC China, suffered a network issue, which was originally described as a DDoS attack on November 19th. This prevented customers from buying or selling during the day when the market fell from approximately $669 to $536 before resuming its climb to new record highs. So you're seeing what's happening. I think the lack of cash, so to speak, and lack maybe of Bitcoin, so to speak. You got this thing where if you go put your money in a banking system right now, dollars into a banking system, I go put $1,000 in the bank. Well, the bank don't necessarily hold all the funds, and don't necessarily have to hold all the funds of my bank account, your bank, everybody,
That's right. That's a good point.
Everybody's bank account. But over here, when you're dealing with Bitcoins, you have to have it.
That's right.
Running currency exchange is technically challenging and financially intensive operation. Given this and the rapid growth of the Bitcoin phenomenon, it should be of little surprise that exchanges are running into issues. An article goes on to say, in the traditional banking sector, banks are required to hold only a small fraction, what I was saying, small fraction of total deposits on hand at any time, but have access to Fed and interbank borrowing to make up any short-term shortfalls in the event of a run on the bank. Bitcoin exchanges and services companies don't have this luxury. What's more, many companies operating in the U.S. are even struggling to maintain a corporate bank account. So it says also, unlikely publicly traded stocks and commodities, Bitcoin doesn't have market makers who hold securities on deposit and ensure liquidity for both buyers and sellers. Bitcoin exchanges fill this role to a small extent, but most Bitcoin customers withdraw their Bitcoin after completing a trade and store these coins in their private Bitcoin wallets. And that's a problem for these exchanges, because somebody wants to buy a Bitcoin. These exchanges don't have the Bitcoins to sell it to them, so to speak. They don't have the benefits of these banks.
That's right.
Like Bitcoin's liquidity issues are symptomatic of a bit imbalance of the supply and demand, and may self-correct as if the market stabilizes. But until this is the case, speculators and those looking to quickly trade in and out of positions should be wary of the reality of this market. In other words, you may or may not be able to do it. This is going to correct itself over time. We've talked about this before, and it's going to be talked about, for some time to come. Bitcoin is a baby. What's going on right now is you're watching the birth of a new currency.
It's growing pains, and it's kind of a good problem to have, because in general, demand is outstripping supply, and I think that's ultimately what we all kind of want to see.
Yeah, and it's good for the people.
We want stability, but we want demand.
It's good for the people that are willing to stay with it. A lot of people are going to throw in the towel and say, Bitcoin, that ain't for me. I'm out. I'm out. You take a guy that had a hard drive full of Bitcoins, and what'd he do? He reformatted a hard drive.
Yeah.
I don't know when he reformatted or when he finally realized what he had done, and he lost several $1 million of,
like $7.5 million.
$7.5 million. Here was a guy that was probably an early adopter, thought it was a pretty cool thing, was interested in it, mined some Bitcoins, had them, and then lost interest or whatever, and say, hey, they're not going anywhere fast, and for whatever reason, he just I'm kind of done. he didn't back it up, and he reformatted his hard drive and lost it. But then you had the guy that had Bitcoins and held them for years, and what did he have and was able to buy a house? I mean, what?
Well, I think the guy you're referring to actually forgot that he had bought the Bitcoins.
Oh, okay.
Yeah, in I think 2009, he paid $26 or something like that for these Bitcoins. Forgot about it. A few years later, he heard that they were worth a whole lot more. So then he went and checked, and yeah, he had $1 million or so worth of Bitcoin.
That's amazing, isn't it?
Yeah.
Amazing.
There's going to be more and more stories like that.
There's going to be a lot of stories like that. And I think Bitcoin, I mean, you've got to be patient with it right now. It may or may not. I mean, obviously it could still not make it, but I think it is shown right now that it's got a good chance of making it. And it's shown also the fact if it doesn't make it, it's leading the way. It's a pathfinder for cryptocurrencies to come. I believe it's a good thing, and obviously if we're doing this podcast and this is what it's about, either I don't believe in what I'm saying or I just like talking.
Yeah.
Either way, I'm enjoying the podcast. Certainly appreciate you being here with Speaking of Bitcoin once again, and hope to have you on future podcasts. And we thank everybody for listening to the podcast, and until the next episode, this is Chet Young of Speaking of Bitcoin, and we'll talk with you soon.